Look at that. 517, that was me 2 years ago. And here's what nobody tells you about having a credit score that low: it's not just a number. It's a tax on being poor. Every apartment. Denied. Want a car loan. Sure, here's 23% interest. Credit card. Forget it. Security deposit to turn on your electricity. $300. You're literally paying extra money for being broke. This is me 8 months later. 761. And that 244-point jump. It saved me $47,000 over the next 5 years. I can prove that math. But here's the thing that's gonna piss you off. Everything you've been told about building credit is either wrong or deliberately designed to keep you in debt. Which is exactly why I opened 5 credit cards in 1 month and my score went up, not down. Look, I'm not a financial advisor. I'm just someone who was tired of getting robbed by having bad credit. So I reverse engineered the system. Figured out what actually works, not what some bank tells you works. In the next 10 minutes, I'm gonna show you the exact 4-step system I used. No credit repair scams. No paying someone $99 a month, just the moves that actually matter. And if you skip step 3, you'll waste 6 months of your life and end up right back where you started. Let's build this bag. First things first, you need to know what actually tanked your score, because most people are fighting ghosts. Your credit score is built on 5 things, but only 3 of them matter when you're starting from 500. Payment history, 35%. Did you pay your bills on time? Credit utilization, 30%. How much of your available credit are you using? Length of credit history, 15%. How long have you had credit? The other 2. New credit and credit mix. They're like 10% each. Ignore them for now. Here's the thing, if your score is in the 500s, you probably already know what happened. Late payments, collections, maybe a maxed out credit card you forgot about. A medical bill that went to collections because you moved apartments and never saw the letter. I'm not here to judge. I had 3 collections, 2 missed payments, and a $1,200 credit card that was at 98% utilization. But here's what most people get wrong. They think they need to fix all of it. They don't. Think of your credit score like a broken leg. You don't need to become an Olympic sprinter. You just need to heal enough to walk, to function, to stop getting ripped off. 500 to 750, that's the sweet spot. That's the zone where you stop getting destroyed by interest rates, where apartments say yes, where you're not hemorrhaging money just for existing. And the fastest way to get there, it's not paying off old collections like everyone tells you. That's actually step 3. Step 1 is something way simpler, and most people never even try it. All right, step 1. And this is gonna sound too easy, but stay with me. You need to prove to the credit system that you can make payments. That's it. That's the whole game. Secured credit cards, here's how they work. You give the bank $200. They give you a credit card with a $200 limit. You use it for gas or Netflix or whatever. You pay it off every month. They report it to the credit bureaus. But wait, I'm giving them my money just to borrow it back. Yes, I know it's stupid, but it works. I opened a secured card with Discover. $200 deposit. Within 3 months, my score jumped 40 points. Not because I was in debt, because I was proving I could handle credit. Here's the secret, though. You don't use the whole $200. You keep your utilization under 30%. That means if your limit is $200, you never let the balance go above $60. Why? Because that utilization percentage, that's 30% of your score. If you're maxing out cards, even if you pay them off, the credit system thinks you're desperate for money. And look, I know $200 feels like a lot when you're broke. Trust me. But think about it this way, you're not spending it, you're parking it. And in 6-8 months, most banks give it back and convert it to a regular card. Here's the move. Get a secured card. Discover, Capital One, or Chime. Put one recurring bill on it. Spotify, Netflix, whatever. Set up auto pay from your checking account. Forget it exists, that's it. You're not swiping it at Target. You're not buying groceries. You're treating it like a robot that builds your credit while you sleep. Credit builder loans. This is the cheat code nobody talks about. A credit builder loan is backwards. Instead of getting money up front and paying it back, the bank holds the money in an account. You make monthly payments. When you're done, they give you the money. Self-lender, Credit Strong, there's a bunch of these. I used one that was $25 a month for 12 months. Total cost, $300. My score, up another 35 points. Why does this work? Because it shows installment loan history. Credit cards are revolving credit. This is different. And the credit system likes to see both. Now look, steps 1 and 2 are boring. I get it. You want the hack, the secret. But here's the truth. Step 2 is where 80% of people quit. And if you quit here, you'll never see the gains that come in month 5 and 6. This is the part where you just hold the line, which brings us to step 3. And this is where it gets expensive if you do it wrong. Before we get there, though, real quick. If you're serious about building wealth and you don't want to miss the next strategy, hit that subscribe button. I drop a new video every week on exactly how to stop getting robbed by the system. All right, let's keep going. Step 3. Debt. You've probably got some. Collections, charge-offs, maybe an old credit card you stopped paying. And here's what everyone gets wrong. They think they need to pay all of it off immediately. Wrong. Here's the thing about collections. They're already hurting your score. Paying them off doesn't remove them. The damage is done. Wait, what? Then why would I pay them? Great question. Let me explain. Collections stay on your report for 7 years from the date they first went delinquent, not from when you pay them, from when they started. So if you've got a medical bill from 2019 that went to collections, it's already been sitting there for 6 years. It's gonna fall off in 2026 anyway. Paying it might make you feel better, but it won't help your score, not much anyway. Here's what does help. Pay off anything that's still active and being reported as currently late. A late payment from last month, that's killing you. Pay it immediately. A maxed out credit card. Pay it down under 30% utilization. That's 30% of your score, remember. Here's my exact priority list. Current late payments stop the bleeding. High utilization cards get under 30%. Collections under $500 negotiate to delete. Everything else ignore for now. When I was rebuilding, I had 3 collections. Total. About $2,400. $1 was a $200 gym membership. One was a $900 medical bill. One was a $1,300 credit card from 2018. I called all 3, offered to settle. The gym. They took $100 and deleted it from my report. Gone. The medical bill, they wouldn't budge, so I left it. The credit card. They offered 50% settlement but wouldn't delete. So I paid the gym, ignored the rest, and focused on my utilization. My score still jumped 60 points in 2 months. Because here's the secret. Your score doesn't care about the dollar amount of debt. It cares about recent behavior. 1 missed payment from last month is worse than 10 collections from 2020. So stop trying to be perfect. Start trying to be strategic. Now, step 4 is the one that actually puts you over 700. This is the compound interest move. The thing that separates people who hit 650 and plateau versus people who crack 750 and never look back. Step 4. The multiplier. You've done everything right. You opened a secured card. You're keeping utilization low. You paid off the bleeding wounds. Now you need time. And a hack. 15% of your score is length of credit history. Basically, how long have you had credit? If you're starting from scratch, this works against you. Your average account age is like 6 months. The system wants to see years. But there's a loophole. Become an authorized user on someone else's card. Here's how it works. Your parent, sibling, friend, someone with good credit and a card they've had for years adds you as an authorized user. They don't give you the physical card. You don't spend $1. But their payment history gets added to your credit report. I became an authorized user on my mom's Amex. She'd had it for 14 years, never missed a payment. $15,000 limit. Within 30 days, my average account age went from 8 months to 5 years. My score, up 52 points. But I don't have anyone with good credit. Fair. Then you skip this step and you wait. It takes longer, but it still works. Or, and hear me out, you can pay for it. There are companies that sell authorized user spots on other people's cards. It's called buying Tradelines. Costs like $200, $500 depending on the age of the account. Is it sketchy? Kinda. Is it legal? Yeah. Does it work? Absolutely. I didn't do it, but I know people who did. They jumped 80+ points in a month. Here's the bottom line with step 4. You've built the foundation. You've stopped the bleeding. You've proven you can make payments. Now you're just stacking time, letting those positive payments add up, letting the algorithm see that you're not a risk anymore. Month 1-2, secured card opens, first payments report. Month 3-4, score jumps 40-60 points. Month 5-6, utilization drops, score jumps another 50. Month 7-8, old negatives start to age out, score jumps again. and suddenly you're at 720, 740, 750. Is it overnight? No. Is it guaranteed? If you follow these steps, yeah, pretty much. The system is a game, and once you know the rules, you can't lose, so let's recap. Step 1, secured card, small limit, low utilization. Auto pay. Step 2, credit builder loan, consistent payments, proves you can handle debt. Step 3, pay off what's currently hurting you. Ignore old ghosts. Step 4, add time, become an authorized user if you can. Stack positive history. That's it. That's the blueprint. 500 to 750 changed my life. I'm not exaggerating. I saved $14,000 on my car loan. I got approved for an apartment I couldn't have touched before. I opened credit cards with actual rewards instead of predatory fees. Your credit score is a gate, and right now you're locked outside of better interest rates, better apartments, better opportunities. These 4 steps, they're the key. So here's my question for you. What's your score right now? And which of these 4 steps are you starting with? Drop it in the comments, and if you want to keep building your bag, whether it's credit, investing, or side hustles, hit that subscribe button. New video every week. Until then, keep stacking, keep building. Let's get this bag.